In just days, billions will flood into one crypto stock, triggering a historic wave of institutional adoption. And your portfolio could be about to skyrocket. On May 19th, Coinbase will officially join the S&P 500, triggering an unprecedented buying spree by every index fund, pension plan, and retirement account linked to the index. Ladies and gentlemen, this is enormous. Trillions of dollars globally are tied to the S&P, and now they have no choice but to purchase shares in a crypto-native company for the first time in history. The clock is ticking. Wall Street is on the brink of its biggest crypto awakening yet, marking a historic shift that changes the game for every single investor. In this video, I'll unpack exactly why Coinbase's inclusion is rewriting the rules of traditional finance, the explosive ripple effects it will trigger, and the strategic moves you need to make immediately to stay ahead of the institutional money surge that's about to hit crypto. Crypto's mainstream moment isn't someday anymore. It's right now. The countdown to May 19th has started, and trust me, you don't want to miss what's coming next. So, without further ado, ladies and gentlemen, let's dive in. So, how did a small crypto startup defy Wall Street and regulators to become a market heavyweight? So guys, just a quick disclaimer, I am an early investor in Coinbase. I just have to get that out of the way. All right, so Coinbase began as a teeny Bitcoin exchange in San Francisco apartment back in 2012. Critics dismissed crypto as a passing fad. Wall Street, I remember, mocked it. Mainstream media, they ignored it. I was listening. And regulators like Gary Gensler relentlessly clamped down, trying to suffocate innovation. JP Morgan's Jamie Dimon famously called Bitcoin a fraud, even comparing it unfavorably to the tulip bulb mania. Yet despite the fierce resistance, Coinbase didn't just survive. It thrived through brutal bear markets, regulatory battles, and endless doubts. It stood firm, fought for clarity, and paved the path forward for crypto innovation. Today, Coinbase is confidently stepping onto Wall Street's biggest stage, alongside giants like Apple, Microsoft, and Amazon. Its inclusion in the S&P 500 decisively marks crypto's transition from niche speculation to mainstream investing. The skeptics didn't just get it wrong. They completely missed the revolution. Crypto isn't just arriving, it's already taking over. Now, what happens when billions flood into Coinbase overnight? Let's break down the ripple effect. Coinbase joining the S&P 500 kicks off a tangible ripple effect across global markets. Over $16 trillion tracks the S&P 500, meaning huge amounts of money automatically follow its composition. Every time a new company joins this index, all funds tracking the S&P must buy the shares of that company to match the index's structure, with Coinbase's estimated index weighting around 0.15%. This means index funds will need to buy approximately $24 billion worth of Coinbase stock over time. Now you're asking, Kyle, how did you get that number? Let me tell you. 0.15% of 16 trillion, the total money tracking the S&P 500, equals about 24 billion. This is the total amount that index funds will eventually need to allocate to Coinbase to align their portfolios correctly. On the very first trading day after Coinbase joins, these index tracking funds like Vanguard, Fidelity, and BlackRock will urgently adjust their holdings, potentially buying $3 to $5 billion of Coinbase stock right away. This estimate comes from typical first-day trading volumes when a company joins S&P 500, representing roughly 10 to 20% of the total expected allocation, as index funds quickly adjust to match the new index composition. To give you a real-world example, when Tesla joined the S&P 500 in December 2020, over $80 billion worth of its stock traded in a single day, pushing prices sharply upward. Coinbase's inclusion, with its unique crypto exposure, is expected to follow a similar pattern, resulting in substantial immediate buying and notable volatility. The effects will extend far beyond Coinbase itself. Companies involved in crypto infrastructure, miners like Riot Platforms and Marathon Digital, custodians like BitGo, and blockchain firms like Galaxy Digital will likely benefit significantly from the increased institutional interest. More investment inflows mean higher valuations, easier access to capital, and faster growth opportunities. Coinbase isn't a trickle, it's a flood. Wall Street's institutional walls aren't just crumbling, they're being bulldozed by crypto's relentless momentum. But why is this happening now? And what's driving this massive shift globally? Coinbase joining the S&P 500 is part of a sweeping global transformation, reshaping finance. For decades, traditional finance fought crypto's disruptive potential. Banks banned crypto transactions. I know I was banned from many. Regulators labeled crypto risky, and institutions dismissed Bitcoin as speculative. Today, those barriers are completely collapsing. You know if you're a subscriber of the channel. But why did Coinbase make it into the S&P 500 now? Primarily, inclusion is based on market capitalization, liquidity, profitability, and a sector representation. Coinbase replaced a legacy financial player, Discover Financial Services, after their acquisition by Capital One. Moreover, Coinbase actively engaged in lobbying efforts, regulatory dialogues, and consistently improving profitability, making it impossible for Wall Street to overlook their market leadership. Central banks, including the ECB and China's central bank, are rapidly developing digital currencies. Regulators worldwide, from the EU's MiCA framework to emerging US legislation, are providing clear crypto rules. Nations like Singapore and Switzerland are embracing blockchain innovation, becoming global crypto hubs. Let's not forget, Dubai was the crypto capital of the world. Institutions like BlackRock and Fidelity are aggressively entering crypto. BlackRock's Bybit Bitcoin ETF has attracted over $44 billion in inflows since January 2024. Coinbase's inclusion symbolizes a macro tipping point, confirming crypto as a core part of global finance. The only question is now how rapidly crypto will redefine the financial system, and Coinbase proves it's faster than expected. Yet, Coinbase's path wasn't always smooth. How did they bounce back from near collapse to market domination? Coinbase entering the S&P 500 is the ultimate comeback story. In 2022, Coinbase was battered, stock down nearly 90%. Critics declared it finished, and regulators intensified pressure. Yet Coinbase didn't collapse. It aggressively pivoted. They slashed operating costs significantly, exited non-core businesses, and optimized their balance sheet. They doubled down on international markets, expanding regulatory compliant operations across Europe, Asia, and Latin America. Coinbase also aggressively built out their institutional services, becoming the primary platform for institutional custody and trading. The strategic $3 billion acquisition of Bybit instantly positioned them as a leader in crypto derivatives, one of the fastest growing financial sectors. Today, Coinbase isn't just surviving, it's thriving, delivering profitable quarters and explosive growth. Its S&P inclusion isn't luck, it's strategic execution, disciplined financial management, and unwavering conviction in crypto's future. Wall Street underestimated Coinbase. Now, investors are racing to catch up, realizing Coinbase didn't just arrive, it emerged stronger and ready to dominate. Coinbase set the stage, but who's the next crypto giant headed to the S&P? Let's dive into Robinhood's potential. Robinhood, initially rejected from the S&P 500 alongside Coinbase, is perfectly positioned. It delivered profitable quarters, rapid growth, and is expanding its crypto business significantly, recently acquiring Canada's WonderFi. Robinhood's improving fundamentals make S&P inclusion highly likely, potentially triggering another massive institutional buying wave. Tracking Robinhood's quarterly profits, user growth, and regulatory developments closely gives savvy investors like you a significant advantage. Coinbase wasn't a one-off event. It's just the beginning. Like all things in the industry, the first domino to fall, then the next. Robinhood will likely follow, and others soon after, opening floodgates to mainstream crypto exposure. All of this info means nothing without action. Here's exactly what you need to do now to capitalize. Check your investment portfolio today. If you own any funds that track the S&P 500, such as many retirement accounts, you already have a small amount of crypto exposure through Coinbase, roughly 0.15%. Decide if this indirect exposure feels sufficient. If you're confident crypto prices will rise, consider increasing your direct crypto holdings or related stocks. Another smart move is paying attention whenever a new stock like Coinbase joins S&P 500. Typically, these stocks experience a surge because large funds automatically buy shares to match the index. If you're a trader, set up price alerts on Coinbase stock to use limit orders to capture profitable swings in price. Stay ahead with Robinhood as well. Monitor their earnings and user growth closely because early positioning can put you in front of bigger investors who haven't yet caught on. Lastly, look beyond crypto tokens themselves. Major investors are increasingly favoring companies that build crypto infrastructure, including Coinbase, Robinhood, custodians like BitGo, and mining firms such as Riot Platforms and Marathon Digital. These stocks offer an additional way to benefit as institutional funds move deeper into crypto. The future of crypto is mainstream, but are you truly ready for what's coming next? Coinbase's historical S&P entry signals crypto's official transition from niche to mainstream asset. Institutional money is here, and the financial landscape is changing fast. Recognizing this shift isn't enough. Act decisively, adjust your portfolio, and strategically prepare for what's next. Coinbase was just the start. Institutional crypto revolution, my friends, is underway. Hit the like button, subscribe, and share this video to help others take advantage of this. You'll do them a favor and they'll thank you later. And always, ladies and gentlemen, remember, stay sharp, continue stacking your crypto, Bitcoin, your sats, and I'll see you in the next one.